Have you ever looked at your profit and loss statements or your tax return at the end of the year and thought to yourself, where did the cash go? Managing your cash is critical to the financial health of your business, and the key to running a business is to have more cash today than you did yesterday. And if that's not happening, we need to find a way to get your cash flow back on track. My name is Cherie, and I'd like to welcome you to the 60/40 Cash Flow series. This series will focus on the 14 things that you can do to begin to take the control of the cash flowing in and out of your business. For the past 15 years, working with my accounting practice clients, I've helped hundreds of small business owners to work less, earn more, and to create a business that supports the lifestyle that they want. Is that what you want? Because these tips are just the start of how we can help you do the same. Our tip number 3 is to focus on your number of customers. According to the 3 pillars of revenue model by J. Abraham, as the name suggests, there are only 3 ways to grow a business. The first is to increase the number of customers. This means that you turn more of your new prospects into paying customers. The second is to increase the average transaction value. This just means that you're able to inspire each client to buy more each time that they purchase from you. And the third is to increase the frequency that the average client buys from you. So this just means finding ways that every customer who buys from you buys more often. I'm an accountant, so I like numbers and formulas, and here are a couple of quick formulas for you. The number of new customers in your business is a function of your lead generation multiplied by your conversion rate. So that's the number of leads you bring in multiplied by the percentage of those that convert. Now the context of this formula is that these new customers buy. Another common way of talking about leads is where the lead converts or signs up to your email list. Now this is usually done via the issue of a lead magnet or something similar. And you would have seen this. It's give me your name and your email address and I'll give you some sort of incentive, like access to a video or a guide, a special discount, or any number of other things. And this is a list building exercise, and there is money in the list. In fact, these people represent those who've put their hand up to say that they're interested in what you have to sell. But for our purpose here, we're looking at increasing the number of customers who've bought something from you. Obviously, these 2 ways of talking about conversion are closely related, as the more people you have coming into the top of your funnel with good engagement and content, you'll be able to then convert more people into paying customers. This next formula is about your existing clients. So your existing clients multiplied by the retention rate equals your retained customers. Retention rate is just simply those customers that stick around and keep doing business with you. This last formula brings it all together. It's your new customers plus your retained customers are now your total customers. So to recap, new customers are a function of your lead generation efforts multiplied by your conversion rate. And your retained customers are your existing customers times by the retention rate. Nothing more, nothing less. We've seen that this does lead to a lot of overwhelm and reaching for shiny new objects or the latest guru trying to sell their tactics or hacks. At 60/40, we aim to show you how to keep the process simple and establish a predictable sales machine which keeps your bank account happy. On the money meter, the medium to long-term impact of this tip is very high. A business with a growing customer base will always be in a much better position than one that's not. On the ease to implement scale, though, this one is a medium. This is more about consistency with no random acts of marketing. To regularly attract new leads and retain existing clients, you need in place processes and systems to make that happen. In this way, it beats marketing as a verb, but there's a large number of assets that you can put in place to make this more of an investment, and we've got a lot more on that in 60/40, but that's for later. Here, the focus is on cash. How do you think that you might increase your number of customers? Or what are some of the things you could do to increase the number of leads you generate or the rate at which they convert to buyers? If your customer numbers grew by 1%, what would that mean for your business? Or what if your overall number of customers increased by 5%? What picture do you have in your mind as to what that would look like? Let us know what you come up with on Facebook or LinkedIn and use the hashtag GrowWith6040. We'd love to hear what you've come up with. Here's our YouTube extra content. Here's 3 things you can do around increasing the number of customers in your business. This links incredibly closely with marketing and sales, and it's really easy to lose sight of what you're trying to accomplish here, so always keep a close eye on your numbers and try not to do any advertising where you can't directly trace a return on your investment. Every stage of the funnel that you use in your marketing should have meaningful metrics attached to them, and these should be regularly looked at to make sure that things are working the way that they should be. So the first one is lead generation. Now, lead generation is simply generating a customer interest or inquiry into your products or services. Leads can be generated for any number of purposes, but it's usually for list building. You want to get these people onto your mailing list in order to make them offers. It's a process that seeks to attract people who might otherwise be strangers to your business. In short, they're people who are potentially interested in buying your products or services. And now lead generation activities can be done either online or offline. The second thing is your conversion rate, and this is where a lead becomes a paying customer. Clicks and likes are not money in the bank, so your goal is to take your leads and have them buy something from you. Now, this might be something small, kind of like an icebreaker, and its purpose is to change the person's relationship with you from one of being reader to one of being a buyer. Or you could just jump right into a large-scale offering. It all depends on the flow that you're choosing to have your customers work with you. Your retention rate is the third one. Now, this is the percentage of customers you retain over a certain period. Your retention rate will depend upon the type of business that you're in and the type of customer that you have. Now, the types of business or stage of life and whether they are repeatable or non-repeatable will all have impact on your retention rate. It's often said that it costs far more to acquire a new customer than it does to keep one. And not only is it more time-consuming, money and effort required to convince and convert someone new, it's more likely your existing customers that will keep your business growing into the future. Now, these three things are specialty topics in their own right, and there's a ton of digital ink been spent on explaining them already. At 60/40, we like to keep things simple, so check out our other programs if this is something that you want to explore more.
Thanks for listening to this tip in our cash flow series. We've got more to come, so keep an eye out for them as they're released on our social channels, or sign up for our email list where you'll get a fast pass to access these tips and more. So just head on over to 6040.io/cashflow to get your access today. And just a reminder, there's 14 tips in total in this series, and we'd love to have you back. Have an awesome day.